Alrighty, beautiful people. In today's lecture, we're essentially going to be going over the exact strategy that allowed me to make roughly $7,000 in the last 2 days. Obviously, first things first, I'm going to throw proof up on the screen. We have two positions at coming in at roughly, I believe, like 2.5K. I grew an account from $4,000 to $8,570. So it's like around $4,500 for that. And then on my swing trade and my swing account for crypto, I'm up roughly $3,000. So you guys should see proof of both of the executions that I'm obviously about to cover. I took one position on Ethereum and one position on Solana. Now, I will say I am typically a futures trader. I typically do trade futures, but opportunities will present themselves on crypto and crypto leverage trading. And I'll basically take all the fundamentals I use for futures trading and then apply them in crypto, but in different formats, right? So if you guys kind of like crypto, you guys kind of like crypto trading, basically this video is for fundamentals that I use for futures, and that is also applicable for futures as well as for crypto. So if you want to get into crypto, this is overall how I look at and what strategies I use basically. So anyways, jumping in, let me make my face way smaller. Jumping into the higher time frame on Ethereum, if we jump on the 4 hour, I'm noticing on the higher time frame bullish structure overall. Overall, it looks like obviously we're gravitating more towards all-time highs on Ethereum. Not all-time highs, because we're all-time highs is 4,200. But the general highs of these general ranges that we're in and we've been accumulating in for the last couple of basically weeks and months. Now dropping down on the 4 hour and 1 hour, my thought process, especially because the CME markets or NQ and ES are reaching all-time highs, what I've noticed with my market experience is when futures markets are reaching all-time highs, Ethereum and crypto as a whole will follow and trail. Overall, it's because the economy right now is semi-bullish and macro bullish, where we can expect cryptos to follow and trail NQ, ES, all that good stuff. So I was leaning in overall just on a discretionary basis. Hey, I'm looking for more all-time highs and I'm looking for continuation on the lower time frame, and I'm looking for overall price to gravitate higher. So strategy-wise, in terms of actual technicals, I dropped down on a lower time frame. Now, what I was noticing in this general range, typically what I notice is when price is ready to actually start moving higher, we will manipulate highs multiple times, right? So we'll set in highs, we'll run up higher, we'll disrespect the high, we'll set in a lower low, higher high, lower low, and then higher highs, right? So general range, we then rebalanced lower, we generated liquidity, we then started to displace to the upside. Now, coming into thought process on a time basis, what I typically noticed is price action for cryptos. The best price action is the day before or the new day of a week, right? So Sunday and Monday is typically when I notice price action starts to really clear up for cryptos. I really don't want to be in positions on Friday nights to Saturdays, just because price action, in my opinion, is not the best. What I typically notice is Sunday open for the CME markets. That's typically when price action starts to run and run very well. And that's ultimately my thought process. Now, in terms of actual technicals, what I saw accumulation. My thought process is, hey, we rebalanced into this inefficiency on the higher time frame. I'm expecting, because we're at all-time highs for CME markets, price action to start to gravitate higher, for then price to meet at least that objective at 26.37. I did ended up taking profit at 3.33%. I didn't want to get too greedy. My RR was very, very good on this. It was roughly a 3.26 RR. I wasn't really in the markets to say, hey, like I'm looking for obviously the move like this, where I could have gone 11%. I was, in terms of the actual positions, using around 25x leverage. So I was trading, the original trade was $4,000, 25x leverage of $4,000, or a $100,000 position. So then that 3% obviously allowed me to make roughly $3,000. And then from there, well, I obviously ended up hitting TP. I really got a really good exit. Now, Confluences of exit, and the reason why I wanted to exit right here is because of the fact that if we go on to Ethereum, we came up, drove past this internal high right here at 539, and then started to accumulate and gravitate lower. So my thought process is, hey, I wanted to see speed and efficiency and displacement to the upside, in order for me to validate a trade and continuation right there. So we ended up running down way lower, and I ended up basically getting the perfect exit fill. You guys should have saw obviously the entries and exits with the screen recordings at the beginning from my brokerage, my crypto leverage trading brokerage. So I closed the position there, and Coincidentally, it was basically a perfect close. Price then rebalanced all the way down lower and then gravitated up higher. Now, my thought process with trading wise is I want a piece of the pie. I'm not looking to get large expansion moves. I don't want 10, 15, 20%. That's where my swing trading spot comes into place, right? So like right now I have 280 Solana, and I swing that for these nice expansion moves of 10, 20, 30%. But if I want to actively day-to-day trade, I will just use leverage with way less money, right? That's my thought process overall. So this ended up hitting TP. Overall, clean continuation, right? We get displacement above these internal highs here. We get a rebalance into those inefficiencies. And I was overall just looking, because bullish order flow was in play here, a continuation to this high, but I ended up taking profit basically at that wick high. Now, you could have said, hey, Salmon, you missed out on 11%. Aren't you salty? Because this individual position probably in terms of dollars would have been like $4,000 to like $15,000, but instead I only made $4,000 to basically $7,000. You have to understand, if you try chasing perfectionism in trading, you're always and you're never going to be satisfied. You're always going to sit there and say, damn, I could have got this, but woulda, coulda, shoulda. And that just, it doesn't serve you any purpose, right? Having the mental frame here of just saying, look, I caught 3%, 25x leverage. I caught $3,000 on my $4,000 position, 75% return. I'm happy with that, right? I'm content with that. So that was my overall thought process. Now for Solana, very interesting. This was at the time that Ethereum obviously rebalanced to this low. So it was around Monday, 12 p.m. Or sorry, actually, I believe the entry was a little bit later. Let's jump on the 1 minute on Solana. So my sold position in terms of RR was 1 to 1.8. In terms of my entry, it was around 1 p.m. in that general range, 1:13 p.m. So I entered longs. My overall thought process and narrative was, hey, price should continue up and back up to that internal high, because on the higher time frame, order flow on the higher time frame is still bullish. I am looking at, hey, we've rebalanced with this leg down lower. Between Monday 9 a.m. to obviously Monday 6 p.m. We're rebalancing lower. Order flow on the higher time frame is bullish. The CME markets are pumping to all-time highs. I'm looking for clean continuation moves to the upside. So my narrative overall on the higher time frame is already bullish. Now dropping down on the lower time frame, what ended up happening is, hey, we got this really nice rebalance lower. We started to displace to the upside. I basically entered at 150, 158. And from there, my stop loss is 149.35, and I was just targeting that first internal high, or 1.54%. In terms of dollars, in terms of risk, all that good stuff, I believe I was risking roughly $2,000 to make roughly, I believe it was like $2,800 or $3,000. So it was like a 1 to 1.8 risk to reward ratio. I simply was targeting that first internal high. Which I'm honestly happy I did, because shortly after we ran all the way down lower. And if I honestly held this position, my thought process would probably be trail my stop loss to break even there. And I more than likely would have got stopped out before ultimately running way higher. Now, I've noticed my personality trait. It's very easy for me to target the first internal high, make a good amount of money, and get out of the market. I just have noticed that. I've noticed, hey, the first internal high I can spot. As long as it makes sense on an RR standpoint, I will target that first internal high, because I know my personality trait works the best there. I know I can combat psych issues. I know I can combat tilt by just targeting that first internal high, because we know that that's going to get met before then rebalancing and continuing higher. So Solana on the higher time frame, thought process was, okay, we're rebalancing into this inefficiency here. Then from there, order flow is bullish. I mean, Ethereum and Bitcoin are also pumping to the upside. I'm thinking overall, hey, we're going to continue to that draw on liquidity at 163.96, but I only want a piece of the pie. So on the 1 minute time frame, I obviously waited for a nice rebalance that happened in around 2 hours. And then from there, 12 p.m. open, we start to displace to the upside. We rebalance. I'm looking for price action to start to gravitate higher towards that draw on liquidity at 153. And that's exactly what we got. Now, a lot of especially ICT traders, what I see them do is overcomplicate trading as a whole, right? You really just need, hey, what's order flow doing? Like, is order flow bullish or bearish? Why is price action bullish or bearish right now? What's the economy doing right now? Overall, what's the thought process of these things? Okay, well, I'm leaning more towards the bullish side, because number one, CME markets are at all-time highs. I'm expecting clean continuations to the upside. So crypto should follow that. If you want to trade crypto or you want to trade futures, obviously whatever instrument floats your boat. I like Solana at certain moments and Ethereum, just because I can get those crazy returns, right? I got around 120% return in 2 days, in 2 trading days. And that was with the proper risk management. So I like doing that occasionally, right? I like making that $5,000 and just flipping accounts occasionally. It's very fun to me, and simultaneously, I make a good amount of money. Like, I'll probably realistically grow this account from $4,000 to $20,000 to $25,000 before I then take at least $20,000, restart at a 5K balance, and throw it more into cryptos and ETFs where I can just stack and compound my money. So like, you guys can use that as a thought process. And even if you're trading funded accounts, for example, and your thought process is like, yo, how do I build wealth from trading funded accounts? Well, those funded payouts you're getting, and that's not your money. You throw that money into a Robinhood account to buy cryptos and ETFs, and that's how you actually compound and build wealth and real wealth. So don't be like majority of gurus where they're like, oh, I got my first funded payouts, I'm going to start going on my Miami trips, I'm going to start doing this and that. It's like, no, come back to reality, bro. You make that money, you make that 5, 10, 15, 20 grand, you withdraw it, you throw it into things that will build you more wealth, and that's how you actually become wealthy, right? Like, I'm classified as a wealthy person because of my net worth and income. It's not just my income, right? A lot of people on social media are like, oh, I make 100K a month, I make 50K a month. Great, how much is in your bank account? Oh, you have 50 grand in your bank account? Well, then you're not really a wealthy person, right? So the same structure for you guys is like, obviously I'm not a financial advisor, but it's like, okay, you want to start building wealth. It's like, take that money that you're making from trading and save it for rainy days in your checking account, and then also allocate those funds to Robinhood cryptos, right? Or whatever brokerage floats your boat. And then as well as buying ETFs, buy QQQ, buy SPY, buy leaps, right? Buy option leaps. Buy things that will make you more money in the long run. That's how you become a really wealthy person really fast. But that's basically the breakdown. That's the overall thought process. That's the overall narrative that I had. Very, very simple for both trades. Reading order flow, reading what market conditions are telling me right now on the higher time frame. Hey, we're continuing on the CME futures market, so I'm expecting crypto to follow. Very, very, very clean continuation to the upside. Rebalance, displacement higher, entries at consequent encroachment of this range, or 50%. Also known as the Fibonacci. My entries was right around 50%, just targeting that internal high, that first internal high. And it was the same thought process with ETH, right? Hey, displacement to the upside. We get displacement above these internal highs. We get a rebalance. We start accumulating. My entry is in discount of this range, right? I catch an entry in discount and I take profit in premium, right? I'm playing ranges, and that's all I need, right? And it's literally this simple, right? You don't need fair value gaps. You don't need PD arrays, especially on crypto. I don't recommend looking at fair value gaps on anything lower than like the 30-minute and 90-minute. Like that's the lowest I'll go to look at fair value gaps, because you look at fair value gaps on the 1-minute time frame. I mean, they're getting ran, right? Like, okay, we have this bullish fair value gap, but then it gets ran. We have this bearish fair value gap here, but then it gets ran. So accuracy with fair value gaps on low time frame for cryptos is inaccurate. But on the higher time frame, that's not the case, right? If you're on the right side of the coin and you have your narrative properly, right? Okay, rebalance into this inefficiency, take an entry, stops around 1%, take profit 3%, boom. Now, especially if you're trading leverage, right? I took 25x leverage. Well, now I just made 70% on what my individual trade was. And this is the strategy that ultimately allows me to make a lot of money as well in the back end. Like, I've been trading crypto, not as frequently, but been trading crypto in the back end and not really posting about it because I just don't feel like posting about it. But I wanted to drop some game on you guys, give you guys some free value and strategy sauce overall of how I think. And the same things I talked about in this lecture are very much applicable to NQ. Other than the fact that obviously 1-minute fair value gaps in the right time context on NQ are applicable and they're very accurate. Crypto, not as much. 1-minute fair value gaps don't really work on crypto. But you have the right narrative on the higher time frame. Hey, rebalance into this nice, beautiful buy side imbalance, sell side inefficiency, displacement to the upside, entries accordingly, stops below, take the trade in discount, take profit in premium, and you've just made a good amount of money. And you just a rinse and repeat thought process. Now, I could have obviously made way more money on both positions. I could have made way more money, but I'm okay with just a piece of the pie. I move on with my life. I make my money and I get out and I invest it. That's all I care about. Anyways, folks, I love you guys. That's going to be the end of this, or these two trade breakdowns, how I made $5,000 in the last 2 days day trading. If you guys have any questions, you guys are confused about anything, leave it in the comment sections. I'll try to respond to as many as possible. I love you guys. Enjoy your day, and I hope to see you sometime later this week. Peace out, y'all.